This morning, 2 phone calls were made. The first call was from a terrified retail investor to his broker, voice shaking, practically screaming, "Sell everything! Get me out now!" The second call was from a billionaire's family office to a Swiss bullion dealer. Calm, quiet, matter of fact. "Buy everything available. We'll take all of it." Today, after a 37% crash that obliterated fortunes, the world has divided into 2 distinct groups. Those who are panic selling at the bottom, and those who are quietly accumulating generational wealth. One of these groups is about to make the biggest mistake of their lives. The other is securing a future their grandchildren will thank them for. This video is about which side you're on, because your choice right now is brutally simple. Buy now, or regret it forever. Let me be clear about what this video is. This isn't a buy or sell recommendation. I'm not your financial advisor. I can't tell you what to do with your money. What I can give you is a strategic analysis of the most important financial decision you'll make this decade. Together, we're going to solve this dilemma with cold, hard data. First, the diagnosis. I'll expose the 3 hidden mechanisms behind this 37% crash, and I'll prove to you it wasn't random chaos, it was engineered precision. Second, the trap. I'll show you the bearish case, the legitimate reasons why this could be a fatal mistake and silver could fall another 50% from here. You need to understand this danger. Third, the opportunity. Then I'll present the bullish case, the data suggesting this is a once-in-a-generation bottom, the last chance to buy cheap silver before it reaches prices that will seem impossible today. At the end, you'll have the information to make your own choice, not mine, yours. Let's start with the diagnosis, because you can't make a good decision if you don't understand what just happened. So why did silver get executed by 37% in a single day? Mainstream media is feeding you the same tired excuse. Profit-taking after a strong rally. That's a lie. What actually happened was a perfect storm of 3 coordinated mechanisms. Let me break them down. Mechanism to number 1, the dollar wrecking ball. As we've discussed before, the DXY, the US dollar index, has an inverse relationship with precious metals. Dollar up, precious metals down. It's almost mathematical. And Friday, the DXY experienced a massive unexpected spike. Why? The Bank of Japan intervened in currency markets to support the yen. They stopped selling dollar reserves, creating a temporary dollar shortage in foreign exchange markets. The DXY surged. And when the dollar surges, gold and silver get crushed. Well, this wasn't natural market movement. This was central bank intervention creating artificial dollar strength. Mechanism number 2, the COMEX options expiry trap. Here's something most retail investors don't understand. Every month, on the last Friday, COMEX silver options contracts expire. And the big banks, the market makers who write these options, they have a massive financial incentive to manipulate the price below certain strike prices. Why? Because if silver closes below key levels, millions of call options expire worthless. The banks pocket the premiums without having to deliver any silver. They used Friday's DXY spike as perfect cover to dump massive paper contracts and deliberately crash the price below critical option strike prices. Coordinated, calculated, profitable. Mechanism number 3, the liquidity vacuum. But here's what made this crash so devastating. Normally, when there are sellers in a market, there are buyers waiting below to catch the falling price. That's called liquidity. It creates a cushion. Friday, that cushion disappeared. All the big institutional buyers, the smart money, they stepped aside. They let the market fall. Why? Because they wanted to accumulate at lower prices. They created a liquidity vacuum where there were no buyers, just sellers panicking into a void. And prices free fell until they hit levels where those same institutional buyers started quietly accumulating. So this wasn't random. This was a surgical strike with 3 precision tools. But here's the critical question. Is the manipulation over, or was this crash just the opening act of something worse? Let me show you the bearish case, the reasons you should be terrified to buy here. Before you rush to buy this dip, you need to hear the counter-argument. Let me give you the 3 strongest reasons why this could be a catastrophic mistake. Bear case. Number 1, the recession is here. Industrial demand represents over 50% of total silver consumption. Solar panels, electronics, electric vehicles, medical devices, AI infrastructure, all of it depends on economic growth. And right now, the global economy is sliding into a severe recession. Manufacturing PMI indices are contracting, factory orders are declining, unemployment is rising, consumer spending is collapsing. When the economy crashes, industrial demand crashes with it. Companies don't build solar farms during recessions. They don't manufacture EVs when nobody's buying cars. They cut production. and that means less silver demand if industrial demand falls 20% to 30%, which is entirely possible in a deep recession. Silver prices could collapse to $50 or lower. Bear case. 2. The Fed is not done. The Federal Reserve is still fighting inflation, and they're not pivoting to rate cuts anytime soon. Jerome Powell made it clear, rates are staying higher for longer. High interest rates make the dollar stronger, and a strong dollar is poison for precious metals. If the Fed keeps rates elevated through 2026, the dollar could surge another 10% to 15%. And silver? It could lose another 50% from current levels. Bear case. Number 3. The capitulation phase. Here's the psychological reality of every bubble collapse. After the initial crash, there's always a capitulation phase, the moment when the last believers finally give up and sell in despair. Some analysts argue we haven't seen that yet. This 37% crash hurt, but it didn't break people. Many are still holding, still hoping for a recovery. True capitulation comes when those final holders surrender, when they can't take the pain anymore, when they sell at the absolute bottom. And that capitulation often happens at prices far below the initial crash. If we see true capitulation, silver could test $50 to $60, levels that would destroy anyone who bought at $75. These arguments are not theories, they're real risks. So why are billionaires buying during this crash? Because they know something most retail investors don't understand. They see a hidden force that is about to drive silver to prices that will make $75 look cheap. Let me show you what they see. Now let me present the bullish case. The reasons why this crash might be the greatest buying opportunity you'll see in your lifetime. Bull case number 1, the unbreakable supply deficit. Here's a mathematical certainty that no recession can change. The world has been consuming more silver than it mines for 6 consecutive years. We're running a structural deficit of approximately 200 million ounces annually. Where does that extra silver come from? Above ground stockpiles, inventories built up over decades, and those inventories are now nearly depleted. COMEX vaults are down 73% from 2021 levels, London vaults down 64%, Shanghai down 80%. When those stockpiles run dry, and they will run dry, there's no backup supply. Mines can't ramp production overnight. It takes 7 to 10 years to open new mines. So we're heading into a scenario where demand exceeds supply with no solution. And when supply runs out in essential commodities, prices don't rise gradually. They explode. Recession or no recession, the deficit remains. Bull case number 2, inelastic demand from powerful buyers. Here's what the bearish recession argument misses. Not all silver demand is elastic. Some buyers cannot stop buying regardless of economic conditions. The Pentagon needs silver for missiles, defense systems, satellites. National security doesn't pause for recessions. China needs silver for solar dominance and industrial capacity. Strategic competition doesn't stop. India is accumulating for cultural and monetary reasons. Thousands of years of tradition don't reverse. These are inelastic demand sources. They buy regardless of price, regardless of economic conditions, and their combined buying creates a floor under prices that prevents true collapse. Bull case. Number 3, the short squeeze trigger. Remember those big banks who manipulated the price down during options expiry? They're sitting on massive short positions, billions in bets that silver will fall further. But here's their problem. They eventually have to cover those shorts. When prices stabilize or start rising, short sellers are forced to buy to close their positions. And when they buy, they push prices higher, which triggers more short covering, which pushes prices even higher. This is called a short squeeze, and it can be catastrophic for the shorts. The 1980 silver squeeze sent prices from $6 to $50 in months. The 2011 squeeze took silver from $18 to $49. This crash might have just loaded the spring for the next massive squeeze. Bull case number 4, the tiny market size. Here's a perspective most people miss. The entire global silver market, all the silver ever mined and available, is worth approximately 1.4 trillion. That's less than Apple's market cap, less than 2% of the US stock market. It would take just 1% of global pension funds allocating to silver to double the price. If even a small percentage of institutional money flows into physical silver during this crisis, the price impact would be explosive, because the market is too small to absorb massive capital without violent price moves. Now let me show you what the experts are saying. Don't just take my word for it. Let me show you what the world's most respected analysts are saying right now about this crash. Goldman Sachs, report published January 31st, 2026. The recent 37% liquidation in silver appears to be a forced deleveraging event driven by options expiry and dollar strength, not a fundamental deterioration. Physical market indicators remain extremely tight. We view this as a generational buying opportunity. We are raising our 12-month price target for silver to $220 per ounce. Bank of America, internal commodities. Memo, January 30th. The physical deficit has reached critical levels. COMEX registered inventories are now at a 15-year low. We project potential inventory defaults within Q2 2026. Any price below $100 should be considered deep value. Recommended action: accumulate aggressively. Rick Rule, legendary resource investor, interview. Quote, I have been investing in precious metals for 40 years. I have waited 4 decades for a washout like this. This is the kind of fear and capitulation that precedes parabolic rallies. If you're not buying this dip with both hands, you don't deserve to profit from the bull market that follows. Sprott Asset Management, market commentary. Silver's crash has created a historic disconnect between paper price and physical reality. Physical premiums are exploding while paper prices collapse. This divergence cannot persist. Either paper prices rise to meet physical, or the paper market breaks entirely. Either outcome is bullish for physical holders. These aren't random YouTube commentators. These are institutional-grade analysts with billions under management, and they're unanimous. This crash is an opportunity. But the biggest question remains, what should you do? Let me give you a framework to decide. I can't tell you to buy or sell. That's your decision. But I can give you a framework to make that decision intelligently. Think of this as a traffic light system. 3 scenarios, 3 actions. Red light. Stop. Do not buy. If any of these apply to you, do not buy silver right now. You don't have an emergency fund covering 3 to 6 months of expenses. You're carrying high-interest debt, credit cards, personal loans. You need this money within the next 24 months. You're investing money you cannot afford to lose. If you're in this category, fix your financial foundation first. Get your emergency fund, pay down debt, build stability. Only then consider speculative assets like silver. Yellow light, caution, proceed carefully. If these apply to you, buy cautiously and strategically. Like you already own significant silver positions. You're heavily concentrated in precious metals. 30% of portfolio. You bought near the recent highs and are down significantly. If this is you, this crash might be an opportunity to lower your average cost, but don't go all in. Don't compound your concentration risk. Dollar cost average. Buy small amounts over time. Scale in gradually. Green light. Go. Strong buy signal. If these apply to you, this might be the opportunity of your lifetime. You have 0 or minimal silver exposure. You missed the entire January rally and regret it. You have disposable capital you can lock up for 3-5+ years. You understand the risks and can stomach volatility. If this is you, this is your moment. Think of it like Black Friday. The world's most critical strategic asset is on sale for 37% off. This opportunity might never come again, but here's the critical mindset shift. Don't buy with the expectation of quick profits. Buy with the understanding that you're accumulating a long-term strategic asset that will protect wealth through the coming monetary chaos. Buy ounces, not dollar values. Focus on accumulation, not speculation. And be prepared to hold through continued volatility. Because if the bullish case is correct, the people who buy at $75 today will look like geniuses when silver is trading at $200 to $300. In the end, the decision is entirely yours. But let me leave you with one thought. Life gives you 2 types of regret. The first is the regret of doing something that didn't work out. You bought, the price fell further, you felt foolish temporarily. The second is the regret of not doing something when you had the chance. You didn't buy. 6 months later, silver is at $300, and that regret haunts you forever. Which regret can you live with? If you buy today and the price drops to $60, you'll feel bad for a while. But if you don't buy today and silver goes to $300, that regret will torment you for the rest of your life. That's what regret it forever really means. So which regret will you choose? Now it's your turn. After watching this entire analysis, what's your decision? Drop your answer in the comments. Buying, if you're accumulating here, waiting, if you're staying on the sidelines. Scared. If you're paralyzed by fear, I read every comment. Let's see where this community stands. And subscribe to this channel because my next video reveals the 3 silver mining companies that could go bankrupt from this crash. You need to know if you own them. The choice is yours. The clock is ticking. 2 phone calls were made this morning. One in panic, one in confidence. Which call will you make?